Here is the first question. The question says, choose one cost account for each of the following descriptions. Write only the cost accounts next to the question numbers 2.1.1 to 2.1.2. So this question paper is a question 2 of June 2018. Now here we are given the descriptions here. Now the first one, it's a direct labor cost. We know that when you speak about a direct labor cost, it's when the organization pays the laborers that are directly involved to the production of the organization. So these are the labor cost, meaning the laborers that are permanently employed, the workers that works in the production, they are paid. So all that money is recorded under direct labor cost. Now direct raw material cost, all these costs, they are directly involved to the production of the product. So when the product is being produced, these costs are being recorded. So let's go to factory overheads cost. These are the additional cost other than direct material cost and direct labor cost. So for example, you can have your insurance, you can have your rent. Those are the factory overheads. Insurance paid for the building, insurance paid for the car that is used to the production. So those are the additional costs that we find. Those are called factory overheads cost. And again, you have administration cost and selling and distribution. Now these ones are related to the administration department. For example, your salaries in the administration office, your stationery, and other kind of costs that are found in the administration department. Another one is selling and distribution. Selling distribution is when now we are selling our product, so it's all about the selling and distribution department. Okay, so these are the accounts that we are asked to allocate there. The first one is bad debts written off during the financial year. For sure, this one is involved with selling and distribution cost, because when we sell on credit, we give debtors on credit, they don't pay us, so we write them off. Pension fund contributions paid on behalf of the workers in the production process, so this one also goes with direct labor cost. Transport cost paid for the raw material purchased, depreciation on office equipment, so this one goes together with administration cost, because it's all about compiling information about depreciation that are in the business, and transport cost paid for the raw materials. So let's just go to the next page and record all these kind of accounts. The first one we said is bad debts. So this one will go together with direct labor cost, as you can see there. So let's go there. So bad debts written off during the financial year. So this one goes together with the selling and distribution cost. This one, let's write the selling and distribution cost. So this one, it's a bad debts written off. Why are we taking bad debts and we associate bad debts with selling and distribution cost other than these ones? It's because if you speak about bad debts, these people, they bought something from us, they were debtors, and they went away not paying us anything. So when we are recording all the bad debts that was written off, we recorded it under selling and distribution cost. So that's why we are writing it there. Okay, let's go to the next one. Here is the second one. pension fund contributions paid on behalf of the workers in the production process. So because of the weight production process, so it means that this thing has something to do with the factory, inside a factory, the production process, meaning that now it's because it's about a pension fund paid to the workers. It has to do with direct labor cost. There it is, direct labor cost. So the direct labor cost, these are the workers that are involved in the production. So it is a direct labor cost. That, yes. So I think let's go to the another one. Here's another one. They say the transport cost paid for a raw material. You must underline this word, raw material. And then you see the direct or raw materials cost. So this must be recorded underneath this one. So we're gonna write here direct material cost. So this is the answer for this one. Transport costs paid for raw materials. So these are raw materials from the supplier to our production or to our plant. So we have paid for that raw material to be in our plant. Let's go to another one. Here is the last one. Depreciation on office equipment. Office equipment, meaning that meaning that it's not underneath selling and distribution, but it's underneath administration cost, because you can find this under the details of the depreciations of the vehicles. So we're gonna write here administration costs. Administration cost. Okay, you are done with that one. Then this was the last one that we had there. Now I think let us go to our second question that has to do with calculations right now. Okay, here is our question that we need us to use our calculator now. The question says calculate the following. So we are being asked here to find weighted average method. Actually use weighted average method in order to find the value of the closing stock. So the value of the closing stock of raw materials of fabric using weighted average method. And then another one is that is 4 marks, the value of direct or raw materials issued for production. And also we're gonna use the same information. Then we're asked to calculate the correct factory overhead cost as 6 marks. So here is the data that we need to do all of the above. Question is 13 marks. We are going to use this data here that we are given by the examiner to calculate the value of the closing stock. What is important about weighted average method is that what you use the total cost of production, right? You always divide it by the total units produced. That's what you do there. Then you must multiply by the closing stock, meaning now you take the closing stock at the end, then you multiply by it. So but I'm going to show you calculations. So if you notice here, we are given total available for the production is 23,700, 2607. But if you notice, they were given the opening stock 535, 2072, the purchases. But if you notice here, this 620 and this 528 and this 924,000, they've been added up, they give us 2072. So these are our purchases. So 2072 plus opening stock, it gives us a total available for production 2607. Same applies when it comes to units here. These are the units, and this is the cost, right, in rands. So these are the units. Same thing applies then. 6200 plus 4.8 plus 7.7, they give you 18700. So when you take 18700 plus 5000, it must give you 23700. So we're gonna take this money and divide it by 23700 and times by 3.9. That's what we are going to do when we are calculating weighted average method, meaning finding the closing stock using the weighted average method. You always say total available for production, that the cost is 2607 divided by the 23700, the total units are produced 23700. Let's go and calculate number 1, then we're gonna go and do number 2 and number 3. Let's start with number 1. Number 1, as I've told you that we are finding closing stock here. Let's go. Now for us to find closing stock, let us say closing stock using weighted average method. Let's go. So we are going to say total cost of production. Now we're gonna divide this. Now we are going to divide this, then just make a line there. Then underneath we're gonna write total units produced. And now we take all this, the numerator and denominator, you must multiply it by the closing stock. Let us go and then do our solution. And then if you notice here, I've told you that we're gonna take 2607 and 23700 total value production. 2607, 23700. Now we've seen that we have 2607,000. Then you just divide that money by 23700, then multiply it by now we have to go and see now how much is the closing stock. Now the closing stock here we've been given is 3.9. we're gonna get this 3.9, we multiply this by this 3.9. then let us go and put it there in our calculations here. So this must appear here 3,900 rand. So this is the closing balance. Now we are going to have how much money we are going to have there. Now let us see in our calculator. Just press there. 26, right? Okay, let me just find again my calculator. Okay, let us redo again our calculators here. Okay, we are having our, if you notice there we have 26,07 thousand. Then must divide it by 23 700, therefore, and multiply that by 3,900. So it will give us 429 429,000. So we must write here 429,000. So this is the value of the closing stock. So we are done calculating the value of the closing stock. Now we have to find the value of the raw materials issued for production. Now this one is very easy. You just take the total cost of production then you must say less closing stock. It will give us the issued for production. In other words, raw material issued. Therefore, if you notice here, we've already calculated our closing stock. We just did it on the above. It was 429,000 rand. We've calculated it. Then you must put it in brackets. And now we must find now total cost of production. We also have it is the amount of the one that we did about the one that is given above. Now this is the cost of production, the one that we're gonna use it there. Let's take it and subtract our closing stock from here. We're gonna get now our issued. And therefore here we are having 2607,000 minus this amount. Then we're gonna have this here. Now we're gonna take now 2607,000 minus 429,000. This will give us 2178. So 2178, we must write it here. Therefore, we're having 2178,000. This is the raw material issued. Done. 3 marks. Let's go to the next question. This is our next question. And remember, what you calculated above would be needed also in as you progress in your as you are doing your questions. These things will be needed. But here now we are told to calculate the correct factory overheads cost, right? Okay, now here we are given wages of factory workers. This has to do with direct labor cost. It has nothing to do with factory overheads cost. Now factory overheads cost, administration cost, selling distribution cost. Now we're gonna take this money here and put it here. Now it's 746,670. So this is our factory overheads cost. I just write it neatly. So it's 746,670. And now this is what we call factory overheads. Yeah. But now there's additional information that we are given them: insurance and rent. Let's write there insurance there, insurance. Let's write rent there. These are the two additional costs that we must calculate. But now we're given additional information. But for insurance, let's start with insurance. Insurance, you are given, you say the insurance of factory plant and equipment paid was 69,600 and incorrectly debited to the administration cost account. Included in this is a new annual premium of 17,400 paid on 1 January 2018. What is important there is to take that 69,600. Now let us have our 69,600 minus, we're gonna exclude the 17,400 because it is already included, that is in the administration cost. That is, it has been already included in the insurance. In fact, in the insurance amount, we're gonna take out that 17,400, but at the same time we're gonna add the 17,400 times by 3/12. Why 3/12 is because if you notice here, they say they included in this new annual premium 7,400 paid on January 2018. So this is a 12 months period starting on 1 January 2018. So it means that our financial year ends on the 31st of March 2018. It ends on the 31st of March 2018. That's our financial year, and we're closing our books on that day. But now if you count here, you're gonna count from January, February, March. That's the end. That's why we say 3/12 year. So for the 9 months, they belong to the next financial year, not in our financial year. Okay, now let's calculate all of this in once, then you're gonna get the insurance amount. Let's use our calculator there. Okay, let's calculate there. Now we are having 69,600. We're gonna exclude 17,400 first of all, then now we're gonna say plus again 17,400, but now we're gonna multiply that amount by 3/12, then it will give us 56,550. So our amount there is 56,550. It's 56,550, 56,550. So this is the amount of the insurance. Let's go to the amount of rent. We can just put our insurance amount there, 56,550. Then let's go to our rent amount down. Yes, our rent is as follows. They say the rent is allocated according to the floor space. However, the bookkeeper correctly allocated only 14,820 to the administration section. So administration section here equals 14,820. That there is the administration is 130 meter square. So we must take this amount of money and use our square meters here to get the rent. Okay, let's go. So let's say rent is equal to 14,820 times by 520 divided by 130. So you take what you want, you put on top. We want rent, so rent is equal to 520 meters square. We're gonna put the rent, then divide by what we have. What we have is 14,820, administration 130. Then you're gonna get your answer there. Let's calculate it. So we're gonna say 14,820 multiply by 520 divided by 130. So we're gonna get exactly the rent amount. So the rent amount is 59,280. Okay, minimize them. Then we're gonna write there 59,280. So this is the amount of rent. Gonna put there 59,280, the amount of rent. But now I want the total of this. We're gonna just total up everything that we have there. So when you total up all that we have them, okay, let's just total up all that. Let me again take my calculator there so we can total up everything. Okay, here is our calculator again. our calculator. It's okay, I think. Okay, so when we total up everything there, 746, 670, 56, 550, 59, 280. Okay, so it's 746, 550 plus 56, 550 plus 59, 280. Then we have 86. Oh, there's a mistake I've done there. We wrote this there 746, 550. So it's, do it again, 746, 670 plus 56, 550 plus 59, 280. Then we have 86 to 500. It's 86 to 500. So this is the amount of the total factory overheads. It's gonna be 86 to 500. Okay, it's a total factory overheads. Then done. Let's go to the next question. Okay, here we are asked again, complete the production cost statement. Okay, it is very good. First of all, we need to know the structure that we're gonna use. The structure of the cost of production is 1, right? Let us go and write our structure. Here is a structure. We start by writing direct material cost. Then we're gonna say plus direct labor cost. We're gonna have a total of what we call, we're gonna have a prime cost. So when you add direct material plus direct labor, get a prime cost. Then we need to add, now we're gonna add our factory overheads on top of the prime cost. Gonna say plus factory overheads. And now once we add this factory overheads, now we gonna look at the following. Let's just put in our monies there, if we still remember our monies. If you remember, for the raw material, it was 2178. There's a raw material that we calculated, 2178. Then we're gonna just take this money and put it there. So raw material, it's gonna be 2178,000. Then let's go and look for direct labor cost. So for direct labor cost, we are given wages of factory overheads worker, direct labor. So it's gonna be 3522. So direct labor is gonna be 22,000. Then you total up everything here. Means that you must total up these two, gonna get a prime cost. Now if you take up your 2178 plus 3522, then you get 5,700,000. So you're gonna get 5,700,000. Okay, let's just go then. So 5,700,000. That's the total of the direct material cost plus direct labor cost. Now we're gonna have a plus factory overheads cost. This one we've just calculated above. Let's just go and look for it there. Here is the total factory overheads, 862,500. Let's just take this money and put it there next to the factory overheads cost. So factory overheads cost, it's 862,500. We're gonna add these things together. Gonna add prime cost plus factory overheads cost. It's gonna give us the total overheads, the total manufacturing cost. The total manufacturing cost. So the name of this one is going to be total manufacturing cost. So we're going to just add all this together and get that total there. Let's add there. So it's going to be 862,500,000 plus 5,700,000. So 5,700,000. So this will give us 65,62,500. 65,62,500. 65,62,500. Okay, this is the total manufacturing cost. How do you get that? By adding all these three. Then we're gonna have now, we're gonna say add WIP. WIP means work in progress at the beginning, 1 April 2017. Then we're gonna say less, again gonna say less WIP, gonna say less WIP 31st March 2018. That's our current year opening balance there. And now we're gonna have now cost of production of finished goods. That's the solution now. Remember, we just minus this, put this one in brackets, then we are short of that one now. But if you notice here, we are given 147,500. If you notice here, so we're gonna just write there, gonna just write here 147,500. We are adding this, we are adding this 147,500. And now let's just erase these brackets here. Okay, just erase these brackets a little bit there. Okay, now we are given this one, less WIP, that is closing work in progress. We don't know it, so we must calculate it aside here. Let's just make a little account here of the finished goods. Let's just change the color there. Let's go on. We're gonna have here finished goods account there. Okay, let's open up finished goods account. Finished goods account, right? And then let us make our drawing here, just a drawing a little bit. Okay, let's just make this one again, this drawing. Okay, here's the line that I wanted. Okay, let's just make this line big. Okay, just do this there. Let's draw a line again. So here, what is gonna happen here, I'm gonna show you how to get closing stock. So let's go. Let's start by entering our opening balance. Our opening balance is equal to we are focusing on finished goods, right? Our opening balance is 231. We're gonna just write the balance brought down to 31,000. Then we're gonna say that our cost of sales. So it's gonna be 18,000. Therefore, we're gonna have our balance carried down. You notice they were given accounts brought down is 118,000. And now if you notice your finished goods account is an asset account, and also it has a debit balance. So on this side we're gonna have WIP work in progress of the finished goods. This also happens on the 31st of March. Now we are going to total up our trade side so they can get our unknown here as our produced. So we want to know how much it was produced, so we can go and put it there. Let's calculate it there. So now we're going to have 18,000. Gonna add 118,000. Thus this will give us 6636. So this is a total on this column here, 6636,000 and 6636,000. Therefore this money was minus this money from that money. Gonna minus 231 from 66,000. Then we're gonna minus 231,000 to get our produced. So it's 6405. Gonna put there 6405,000. Okay, let's put our money there, 6405,000. Now let's deal with this one first. If you take this money and you add that money, how much you're gonna get there? Okay, let's do that. So let's add. Let's say 500 plus 147,500. So it's gonna be 6710. So we're gonna have 6710 there. 6710 there. Okay, let's go and write 6710 there. So 6710,000. This is the money that we were looking for the total of everything there. Then we're gonna take this money and exclude that one. Then we're gonna get the closing stock there. So when you take these monies and minus each other there, so we're gonna say minus 64,05,05 now 1 2 3. So it's 305,000. That's the value of the closing stock. So 305,000. That's what we're looking for then. Then you are done with this question paper. Hope you enjoyed this session. I'll see you in the next session. This we've just done here, production cost statement only. From me, thank you very much for watching this video. I will see you to the next video. Thank you.